Welcome, everyone, to another exciting episode of the Team Lead Talks podcast. I'm your host out of Alexandria, Virginia, Andrew Becker. On today's episode, really excited for this one, you guys. We have Logan Freeman, who is the managing broker of Midwest CRE Advisors. Welcome, Logan.
Hey, it's my pleasure to be here, Andrew. Happy Monday and happy President's Day.
Yes, happy President's Day to you as well, Logan. So let's jump right into this, dude. For those who don't know you yet, give us a high level, like who you are, how you got to where you are today.
Yeah, you bet. Capital, Missouri is Jefferson City, and that's where I grew up. I grew up, with this work ethic of, go to work, sweat and make money, right? So 14 years old, baling hay, working at a catering business, washing dishes, burning trash. I mean, you name it, just doing everything that you could to make a buck. And, I think that really taught me that things that you value and which is your time, you need to put the right value on them. And so I identified as an athlete my whole life growing up. Had the opportunity to play collegiate football at the University of Central Missouri in Warrensburg, and then a little bit in the NFL after that. And so was picked up as an undrafted free agent with the Oakland Raiders, was ultimately cut, went back to school, finished my master's degree. And in a matter of 6 months, I lost over 100 pounds. I lost my father to his battle with drugs and alcohol. I'm no longer a football player, and I am making 265 cold calls a day at a small town in a small company, trying to figure out what the heck to do with my life.
Yeah.
And so that was just a massive turning point that led me to reading. And reading allowed me to find books like Robert Kiyosaki's Rich Dad, Poor Dad and Napoleon Hill's Think and Grow Rich, right?
Mhm.
Which started me on this track of well, there's got to be themes, there's got to be patterns, there's got to be cycles. And I start hearing Tony Robbins talking about, pattern recognition and figuring out, these themes and seasons of life. And then so I start reading Jim Rohn. And at the end of the day, I just figured that hey, if you want to be truly a part of the 1%, you have to take some risk and you have to take things into your own, your own hands. And that's being an entrepreneur. And I felt like, the real estate entrepreneur route was the way for me to go because I love tangible things. I had built buildings. I had poured concrete. I had baled hay. It was just like this next thing that
Yeah.
made sense for me. And so I've poured all of my last 10 years into becoming a better businessman, a better real estate investor, a better real estate broker, and dominating my niche here in Kansas City.
Dude, that is an incredible story. And I know when we had talked on our pre-show kind of connection call that we had, you're in like the close to $500 million of deals, right? Somewhere
Yeah.
like in the multiple.
Yeah, after this year,
multiple
we'll be closer to $1 billion deals of deals done than in the millions. So that's super exciting.
Yeah, man, that is so awesome. So you kind of started, if I may summarize, working in real estate, right?
That's
Like
right.
building stuff, construction stuff, swinging a hammer. And
Yes.
then you made this transition. I'm a big reader as well. I know we shared in that before too. And you started to say, hey, I'm not going to let somebody else control my future. So
That's
I'm
right.
going to take control and you have that entrepreneurial bug that you and I both share. And you said, I'm going to figure this out for myself. So you educated yourself, you figured stuff out, right? And then you got into real estate. Talk to us about that. Like when you made this transition from like, man, I'm really not sure where this is going to take me to know exactly what I want to do. How did you actually get started? Like what was the first tactical, tangible thing that you did here?
Well, I felt like moving to Kansas City, I should buy a house and not rent. And so while all my friends were in apartments or, renting, I scrummaged up enough money to put it down on a down payment. And I wanted to go build equity in a house. And so I bought a house in a good area
Mm-hmm.
or an up and coming area that needed work. Right. And it was a small two bedroom, one bathroom house. Right. But it needed to be renovated. And I figured, well, that's something I can force the appreciation on, right? So I bought my first single family home. I started to renovate the house myself. I rented out a bedroom, paid half the mortgage,
Nice.
and 2 years later, so I didn't have to pay capital gains, I sold that house. And when I sold that house, the check that I got at closing was more than my salary that year at my W-2 job. And I absolutely knew that I was in the wrong business. I needed to be in a scenario, a structure, a framework that allowed me to be paid for my performance and the value that I was actually bringing to the marketplace.
Dude, that's amazing. What you just said, very few people actually do. And you almost sacrificed in a way, Logan, where you bought a house that maybe was in disrepair. I don't know how the extent of it, Logan, obviously, but you put in your own sweat equity in there. And you mentioned something that was very strategic move on your part. You rented one of the rooms out in your own house. A lot of people, including myself, I've never been able to do that. I've had rental properties, obviously, but you lived with someone who is helping you pay your mortgage, and then you're able to take that after the 2 year mark and then sell it. Did you 1031 exchange that into your next, or like, is that what the momentum started where you got the ball rolling into this line of like flipping? Or talk to us about where you went from there.
Yeah, no, I mean, since I didn't have the capital gains tax, I was able just to pocket that money, right? So, that's the beautiful thing about, doing that. Those funds actually turned into my wife's engagement ring. So,
Okay, nice.
yeah. So, I actually, was still in the entrepreneur's world, but not in real estate at the time. I joined a startup company and I helped grow that company in the transportation industry. And then about a couple of years later, I ended up taking another W-2 job. I was there for about 15 months. And in 2017, I was fired.
Hmm.
So the private equity company came in and they laid off the sales force. And I was one of those people.
Gotcha.
My wife and I had just moved into a new home and we had no children at the time. And so, she just said, "Look, I'm going to support you 100% on what you want to do." And at that period, I still wasn't sold on just doing real estate. So I had a lot of sales experience. And so what I did was I grabbed Inc.'s fastest 5,000 growing companies. I cold called 2,500 of them, and I landed 3 full-time sales consulting roles with those companies. I you know I was just cold calling for them. I was building CRM systems for them. I was training their salespeople on Franklin Covey sales training methodologies. And but at the same time, the same guy that was helping me source my houses that I was buying and living in and flipping, he called me and said, "Hey, we had a fund that we just signed up, and my head of acquisitions left." I said, "Well, I'm your guy." And so 2 weeks later, I've got my real estate license, and I start doing 12. This is the buy, renovate, refinance, or rent out, refinance model,
The
right? We
Burr
did the
method.
Burr, yeah,
Yeah.
but we did
Okay.
this at scale across 265 homes here in Kansas City. And that was the foray into the syndication world of doing multifamily, retail, office, and industrial, and now development that I do now was actually just effectuating and working all 265 of those transactions over an 18-month period.
Man, that's incredible. Over an 18-month period, you just said.
Mhm.
That's crazy, dude.
Yeah,
Okay.
it was fast.
Was this something you did? I'm just trying to line up the timeline here. You were hired to do this for someone, another entrepreneur, or was this part of your portfolio as well?
The first 265 homes, I was just the head of acquisitions for a fund that was buying here in Kansas City. Yeah.
Okay. So you learned a great deal of how to
Yeah, it
acquire,
was
how to do that. Let's talk about what you did next, though. You just made this another transition after another 15, almost 2 years, a year and a half, I guess, 2 years of like learning the skill and the trade. So how
yeah.
did you finally say, okay, now, and correct me if I'm wrong, did you leave that operation and say, hey, I want to do this on my own. I'm going to build my own generational wealth for myself and my family. Can you like now what's the next phase in like the Logan story?
Yeah, I think that for me was I understood the structure and the model of the syndication. I just didn't really love the complexity of doing it at scale with single family homes. I think single family homes can be a wonderful asset class to invest in and to hold in a portfolio, but I felt like doing multifamily and commercial real estate was going to get me where I wanted to go farther, faster, And so I actually ended up changing or moving my license over to a commercial real estate firm. And again, I didn't just jump in and start buying assets myself. I started to represent clients. They were completing 1031 exchanges. I would go source. So I took the same strategies of finding those single family homes, but doing it with multifamily, right? Really 5 to 25 units is what I got started with. I had to learn how to underwrite those deals, find those deals, negotiate those deals, go get those deals through inspections and get them closed, right? And so I did another, $100 million of just brokerage work on shopping centers and small multifamily properties, which gave me kind of this new skill set of understanding, the different asset classes that I thought I wanted to invest in at some point, which was just the next stair step into actually figuring out how to start building my own portfolio. So I went from single family homes to brokerage on commercial and multifamily to then around 2019, pre-COVID, the beautiful aspect of podcasting, I was on a large podcast and some investors heard me, and I was able to go out and speak to Apple and eBay and Amazon and Intel. And, I was at their campuses talking to their internal real estate groups. And I found out that these guys and gals were living in money states. They were making a lot of money, but it was very hard to do real estate deals in those states. And so we just created a pipeline from really California and to the Midwest. A lot of them hadn't even heard of Kansas City before. It was before the Chiefs were winning Super Bowls, right? And before Taylor Swift was hanging out in Kansas City. So, we just created this pipeline to say, hey, we can be the deal states here. Here's how we would structure those properties. And we started to acquire assets that way.
Very cool. So those were your clients. You just named some pretty heavy hitting companies like Apple. Were those your clients that you're helping to build out their portfolios as well?
Twofold, yes. They ended up buying their own assets, so selling maybe a house or a fourplex in California and doing a 1031 exchange into a larger property here in Kansas City. But additionally, a lot of them wanted to be hands off. So that's when we started to actually put together those syndications and buying properties here in Kansas City.
Hey, you mentioned this word twice now, syndications. And for those, I've been in real estate a long time, so I understand it. But for those that don't understand syndication, what that is, can you explain that?
Yeah, absolutely. It's just a pooling of resources together, to be able to go buy a larger asset, right? And so Regulation D 506B and C allows you to use digital marketing and social media if you're doing a 506C to actually raise funds from truly passive investors. And there's a legal structure that you can put together. And there's a general partnership team that is going to find the asset, renovate the asset, manage the asset, and then passive investors who, invest their funds into getting ownership in the LLC that owns that real estate. And so, this syndication model, when done correctly, can be extremely powerful for a lot of people to be able to get diversification into a larger apartment complex or a larger shopping center or industrial building that they would never be able to purchase by themselves because of one, financial constraints, or two, experience and being able to find those real estate deals. So that's really what a syndication is in my mind.
Yeah, and you're the one kind of bringing in the syndication, all the people, all the players, all the parties, etc., into this group and saying, "Hey, I'm going to lead the way. I'm going to find the property. I'm going to figure it out. I'm going to underwrite it, see if there's a deal to be had, and then if there is, everyone gets to take advantage of your experience and your expertise to say, "Hey, I think there's an opportunity to make some money here," and then you move forward with the project, right?
That's exactly right. Yes.
So let's talk about that process. We just went over it at a very high, fast level. But how does one even get involved in a syndication with you, Logan? Like if someone's like, man, I like what Logan's saying. I have money. I'm not really sure what to do. Maybe a syndication in a commercial project makes sense. Talk to us about like at the very start, if someone wanted to reach out to you, how do they get that conversation going?
Yeah, absolutely. Well, I'm super active on LinkedIn, and you could just find me Logan Freeman, Mr. Kansas City. I will tell you, I've slowed down quite a bit on the acquisitions of properties. I think this year may represent an opportunity for some buying opportunities, but the last couple years have been quite the roller coaster of asset prices going up and down and interest rates doing the same thing. So I've stepped out of that game a decent amount, just kind of getting ready for the next opportunity to purchase assets. And I've spent a lot of time figuring out where the supply and demand imbalance is in Kansas City. And I've taken a different approach now. I think that for me, finding land and getting the land entitled and actually doing developments is a lot more feasible for my future in regards to doing these syndications. But you can always find us at www.mwcreadvisors.com, or you can reach out to me on LinkedIn, and I'd love to have a conversation with anybody.
Very cool. So nowadays, just to clarify, you spend your days developing raw land, it sounds like, and
Yes.
figuring out what you want to do. Are you building shopping centers? Are you building apartment complexes? What are you doing with it?
Yeah, well, a couple different things. Mostly small bay industrial, 1 to 4,000 square foot industrial bays, usually around 12 to 15,000 square foot buildings. And a lot of it has a lot of yard space because we have seen a huge tailwind in regards to manufacturing logistics needs. Kansas City is actually growing from a single family home standpoint. Couple real big public invest or public builders are back here in Kansas City building in specific nodes of our submarkets. And so I have seen a big demand for these tradesmen needing spots for their businesses. And we have developed a lot of big logistics and warehouses in Kansas City, but we've kind of neglected that 1 to 4,000, maybe even 5,000 square foot space. And what I love about this industry and this asset class is they're really zone locked, meaning they're very difficult parcels to find. Getting them up zoned is nearly impossible. So it is very difficult to build where these properties need to be. And so if you can find that intersection, usually they lease up very quickly and rents are going up substantially in that asset class. So that is one that I'm absolutely focused on. And we're working on a sizable 85,000 square foot development here in Kansas City that will hopefully break ground in April of this year.
Awesome, dude. Man, this has been such a fantastic story. I love hearing kind of how you got your start, Logan. At the beginning of this conversation, you dropped a lot of books that I've read and that I really love to read. I always ask people at the end of these things, Logan, like if there's a resource you can share, a checklist, a book. I'd like to stay on that genre, the book genre. The ones that you didn't name, though, I'm more interested in. What, if anyone out there is like, wants to better their life, their community, their business itself? What's one other book, not the ones that you've already named, that you can share with us that kind of changed your trajectory?
Yeah, well, I mean, Napoleon Hill wrote Think and Grow Rich, and there's a what we'll call the missing secret in there, where he doesn't really give you that secret. And so John Mitchell is a gentleman that I've gotten to know over the years and really respect. He wrote a book called The Missing Secret, and it's kind of the sequel to Think and Grow Rich. That book has
Interesting.
absolutely Yeah, that book has absolutely changed my life. And he has a 12-minute methodology that you can really kind of get your life GPS created through chat GPT that he's generated. So it's a very, very awesome resource. And I listen to that every single.
Okay. I asked this question because I like to acquire books. I'm trying to fill in my bookshelf. I got like a
I
top
see
shelf.
that. Yeah.
So my wife hates it because like every day I get like 5 or 6 books from these. But John Mitchell's The Missing Secret. That's
That's
what.
correct.
Okay, cool. I'm adding it to my cart now, and thanks to the good people at Amazon, I will have it overnight.
Yeah,
So
you're
I
going to love that one.
appreciate that recommendation. I appreciate your time, Logan. It's been awesome, man. Thank you so much for being on the show today.
Thanks for having me, Andrew.
All right, man. Take care.
See ya.